Hello, I'm Jim Adams, and welcome to the Easy Investing Income YouTube channel. Today, I want to share with you my results for 2021 selling options. I've been on a journey and I'm slowly getting better at selling options. So, I'm going to go into the things that worked, the things that didn't, and share with you kind of what I'm looking at for next year. So, stay tuned. I'm sure you're going to enjoy what I have for you. Okay, I've opened up Excel and I've created a yearly review spreadsheet. So I'm going to kind of go over it. This pretty much everything is in one place, and what I've done is I've noted for each month how much I made and and how I did. But before we jump into the specific detail by month, I do want to mention for the start of the year, I had an account balance of 577 832. So this was primarily for my brokerages. It does not include my retirement accounts, which I know for a bunch of you who have been watching this, I did have two losses in my retirement accounts related to ARC. So I won't be discussing that. I may do that in a future video. So this is just my brokerages, which is primarily what I used to live off of currently. So I started 2021 with 577. I finished or will finish with 642, 435, and I'm filming this or recording this on Wednesday. So we do have one more day of trading, but I don't plan really to do any more trading. I've reached my goal for this month. I believe I'm close to 2,800, 2,700 for the month. So most likely I'm not going to do any trading unless for some reason there's a huge market correction and I just can't, stay out of trying to find some good premium. So here I've noted the Microsoft loss, and it was the only loss I've had in these two brokerages. So it is two brokerage accounts. One is around 211, and the other one is like 400 and something. And these have I also show the cash. So I started out with 81,000 in cash and I finished with 146. So I have a lot of cash currently. I have over 146,000 that I'm using primarily to fund my puts, selling of puts. And again, going back to the loss, I did have a 2851 loss in Microsoft, and I'll show that with the actual month. And cash for living. So I did withdraw during the year over 51,000 to live off of. So this 11%, you can see the percent change between the start and end of the year. I show 11%, but if you add back in that 51,000 that I use for living expenses, it's more like 20%. So it's nice to have more cash at the end of the year, just in case if we do have a major down market, first quarter, second quarter, something along those lines. I've got plenty of cash, and I still have quite a bit of cash left, even when you subtract the, what I need to keep for the margins for the puts that I currently have. So let's go ahead and jump into what I did monthly. So here, starting out for the month in January, I made 1584. I had $88 as an average trade. The reason I'm showing that in yellow is those were my lowest month. So the lowest average trade as well as the lowest I did all throughout 2021. So that's why I marked that in yellow. You notice the green is the highest I did in any particular month. Now expiration in weeks. So the average trade was had an expiration of 5.6 weeks, which is between that 30 and 60 days that I mention a lot of times in my videos. So I'd like to do it between 30 and 60 days. And for the average delta, I did about 1.966. So around that 20 delta that I talk about. And I won't go over every month like this. I'm just starting with January, and I'll make a few points because I don't want this video to be too outrageously long. So I did 18 trades, um, and I did 21 contracts. So I mostly did one contract per trade. You'll notice by the end of the year, I'm doing pretty usually two contracts for every trade to be able to make a little bit more premium. I did more puts, and you'll notice earlier in the year I definitely did a lot more puts than I did calls. So I did 12 puts and 6 calls, so almost a 2-to-1 ratio for doing the calls. And then I only rolled 2 trades. So that started the month, and then I kind of stuck to the same thing throughout, through the next month. I did a little bit more, did 1808. I did a little bit higher delta, and the average trade was 95. And I did 25 more contracts. You'll notice that I keep increasing the number of contracts that I do per trade. So, and then the next month were a lot of the highest. So I had the highest average trade, which was 262. For some reason, I didn't track delta at that time. Maybe got a little bit lazy, and um, total trades 11. And the reason that's green is I only did 11 trades, so I didn't really spend a lot of time, and there were 16 contracts, so that's why it's showing 262. So a really good month with I was able to earn quite a bit of premium. And you'll notice that the next month I did 1800. It had the shortest expiration of any month. And you'll notice that as I go down, I do increase the expiration. I've done a little bit more leaps, and that kind of causes the expiration, or the number of weeks for expiration, to really go up exponentially. Um, so you can see as I go, I pretty much stick pretty close to the 20 delta. I think the highest I had, if you look at delta, was 23.96, so that's close to a 24 delta, and the lowest was 19. Um, and you can see after I reached that 29.28, I pretty much have been able to do over 2,000 a month. So the next month, which was June, I did 2,062, and then the next month 2130. And then recently I've been able to stay above 2,500. So in October I hit 2,674, and then 2,610, and then this month I'm already at 2,912. So like I mentioned, it's been a really good month. Now part of it is because I have quite a few leaps in there, um, but also the market has hit new highs, and I've had a tougher time finding good puts. You'll notice that here, like in December, it's 9 calls and 9 puts. So again, about a 50-50. Whereas earlier in the year, I was definitely doing a lot more puts. And in the last 2 months, same thing, 10 puts, 9 calls in both October and November. So that was kind of something that changed. I by the end of the year, I was definitely doing more covered calls than cash secured puts, and part of that again was because the market has been hitting new highs, and it's been a little bit harder to find good premium. So I won't go into a lot of detail. The only other thing I did want to mention is I've also been averaging 19 to 20 a trade, and between 140, 150 um, average per trade. So, and then let's actually jump down to the totals. So the totals I've done, um, I've done a total of 193 trades, and I made $25,273 for the year, and that includes this loss. You notice this is when I took the loss from Microsoft, which was August, and it was a $2,851 loss, and that was in my brokerages the only loss that I took. Now I did have some assignments. I think I had two stocks that were assigned, and primarily that relates to the ex-dividend date. I got caught, and someone actually had the contract assigned, mainly because of that ex-dividend date. I wasn't tracking that ex-dividend date, and that's something that's very different. We'll talk about once I started doing this planning worksheet every week. I have not been having any additional assignments related to the ex-dividend date or expiration. So I always try to trade if there's any chance that it could be assigned because of the ex-dividend date. I will trade that stock the day before, as well as expiration. I never wait for expiration. If something needs to be closed or rolled, I always will do that the day before expiration. And I typically won't let something go through expiration unless it's way out of the money and it's something I want to own. So, so we'll see the average trade for the whole year was 136, which isn't bad. I'd like to possibly increase that going into the next year. The average expiration weeks is 9.74, which is 10 weeks, a little bit outside of that, um, 30 to 60 days. And again, a lot of that is because I did do some leaps, especially in Coca-Cola. I did a fair number of leaps, and that kind of caused that number to be a little higher. If you took out the leaps, it was probably closer to 5 to 6 weeks. Now the average delta for the whole year was 22, so it was a 22 delta where I was shooting for 20, and that's a lot of that has to do with when you sell options. The delta sometimes will never be right at 20. It may be 22 is the only delta you can get close to 20. So to me that's really good is to be able to get a 20 on average a 22 delta, and it's also kept me out of a lot of trouble other than Microsoft, and we'll talk a little bit about that later in the video. And in total trades on average, I did 16 trades a month. And I would trade, and at the beginning of the month I might do a majority of the trades, and by the end of the month I wouldn't need to do many trades, kind of like what's going on right now. Like I really don't need to do any more trades, and I probably didn't need to do any trades this whole week. So, and in total contracts now is averaging 25.5. So you can see there's definitely it's going. Most of my trades now are two contracts, um, except for the covered calls. Because if I only have 100 shares in something, then I can only do one contract. So covered calls is probably causing that number to be a little bit lower than it should be. So most of my cash secured puts and vertical put credit spreads are two contracts, and they're typically always not typically they're always stocks that I'm fine with owning if I get assigned. And then at the end of the year, you can see I did 9.58 average number of puts per month, and I did 6.5 average calls per month. And again, the calls were primarily covered calls. I did some vertical call credit spreads, and that's how I got in trouble with Microsoft. So I'm definitely not going to do that anymore. And then you can see on a percentage, it's 60% puts and 40% calls. Um, and I did about 30% was rolling trades. I think that may be a little bit distorted. It could be because of Coca-Cola and so many of the trades that I've done with Coca-Cola that haven't been rolled because they're leaps. That number is probably a little bit higher because I found really good premium in rolling puts especially, but also calls. So that's the whole year. Again, I'm not going into detail about each month. I will be putting this spreadsheet out for my patrons, and I may even put it in a post coming up soon on my easyinvestingincome.com blog. But let's jump into what I kind of learned, and let's jump into this. So goals, this is real interesting. I started out with a goal of 1,000 a month, and this is something I talk about with my patrons, especially at the higher level, which is the trader level, which is 25 a month. We have a weekly meeting and we have Discord, and the meetings are getting real interesting. We're talking about what we're going to be looking at coming up, what our goals are, and I think goal setting is really important. And I do it differently because being that I'm pretty close to retirement, in a way I am retired or financially independent, that I look at it with how much cash I really need per month. So I started off back in September of 2020 with hoping to get 1,000 a month. Well, I was able to reach that no problem. So come January 2021, I upped it to 1,500 a month, and again I was easily able to reach that. So in February of this year, I upped it to 2,000, and I've kept it there. but I've been consistently able to get over 2,500. So I'm looking at next year, maybe setting it at 2,500 as a goal, or possibly 3,000, but I haven't quite decided. And how this really helps me is once I get to that point of 2,000 or 2,500 a month, then I don't do a whole lot of trading. Majority of my trades are the beginning of the week, and it's very passive. I don't spend a whole lot of time. I mean, I think I had 4 trades on one particular day, and I post all my trades to my patrons on Patreon, and I probably spent 2 hours doing those 4 trades and made $400 or $500, and that's been the gist. 4 or 5 hours of trading a week is it, and that's what I like. In a lot of my other videos, I talk about how I do market trades, and I do that with Schwab mainly because I want to be done. I don't want to be changing, limit values and trying to work the trade all day. I want to get in and out and enjoy my day, and that's what I've been able to do. So being able to set a monthly income has worked out really well. Now, setting it low at first is what I recommend to anyone just getting started. So set a goal. I set 1,000, but I had been selling covered calls probably almost 20 years, and so I had some experience, and I knew I could probably do a lot more, but I wanted to start small and get used to selling the option. So start small. If you need 3,000, well, say, well, 500. My goal is 500 a month selling options. Um, and then I also, another major goal that I like to do is the average per trade. So I started off with no average per trade. I was just kind of trading, and then I've set $100 per trade. Now I've been able to do that, and I'm playing with the idea of actually setting next year's to like 150, because I like to make it really passive and get in and out and be done with it. And I'm finding I'm trading some of the same stocks, usually mostly the same stocks, and I've got those in a watch list, so it's real easy. Um, so I think I can do that by maybe even going from 2 contracts to three contracts, especially if it's an inexpensive of a stock, something in the 30-40 range, and I've got plenty of cash to cover it. So that's something I'm considering. Now, I do have my guidelines over here, and these I think I'm going to keep in place. The only difference may be, like I said, maybe doing in more instances 3 contracts instead of 2. So I'm going to leave the 20 delta for next year. I'm going to also look at a strike price that's 10% above for calls and 10% below for puts. If you can make in one trade a 10%, even if it's a sign, you're doing really well. I'm going to keep the 30 to 60 day expiration. I'm going to probably change that a little bit, or maybe just remove the leaps, or the ones that are more than a year out, because they do end up messing the averages up above. I'm also going to only do covered calls, cash secured puts, and vertical put credit spreads. I have done iron condors, but I found it was a lot of work for a lot less premium. So I may change that if I find a way to do it that makes more money. But right now I'm going to stick with those. I'm not going to do any naked trades. I did do a naked trade on that Microsoft, and that's why it got me in trouble. It wasn't really naked. It was a call credit spread, and it was a vertical call credit spread, but I didn't really own Microsoft. If I had owned Microsoft, then it wouldn't have been naked. But it's my biggest loss, and I'm no longer going to do anything naked. I'm going to either have the cash to cover it, or I'm going to have the security to sell a covered call on it. And here I'm just talking about Microsoft, that was the big loss. No naked vertical call credit spreads. And again, Microsoft is one of the big losses. I'm also going to avoid high volatile stocks. Now, I actually said this. I went back on one of my spreadsheets and the videos, and I said I was going to avoid ARK, and I didn't, and it burned me. So I'm not going to be selling any more cash secured puts with it, or vertical put credit spreads. I may still do covered calls. I do own some of it, but that's going to be primarily what I do. I'm going to stay away from anything that's too volatile. And ARK had a lot of premium, and I think that premium kind of made me a little bit greedy, and it ended up burning me. And again, I'm not talking about that here. It wasn't in my brokerages. It was in two different retirement accounts that I took. I think I took a $700 loss on one and an $800 loss on the other. Um, but now that I know not to do that, I think I'll do better going forward in those two accounts. And then I also close at least a day before expiration or ex dividend date, and that's been critical. So I don't ever wait if something needs to be closed or rolled. I don't wait to the expiration date or the ex dividend date. Actually, I try to do it at least 2 days before that, but at a minimum 1 day. I don't leave something that's close to the money or near the money on expiration day or in the money on expiration day. So one last thing to go over. So my biggest lessons learned. Um, so let's just go through these quickly. So did one iron condor, and again I did that on Coca-Cola, and I only made $57, and it seemed like a lot of work. So I'm not looking at iron condors currently. Um, Here I had a strategy early in the year. If you guys listened to my videos back in January, February, I came up with this idea of every 2 weeks I was going to do two contracts of ARKK, and that's part of what got me into trouble. So not a good idea. I made some good premium, but it ended up coming back and burning me. So I'm going to avoid those volatile stocks like I've been mentioning. I'm doing secured vertical puts instead of cash secured puts, and that what I typically do is if I can buy a contract it's for that outer arm and it's inexpensive, I go ahead and do it. It reduces the amount of margin and can potentially make it a little bit easier to roll. So that's something I added to kind of midway through the year. I did more covered calls with longer expiration later in the year, and um, with the market being up so much, in some cases and a lot of this is Coca-Cola. I looked at, well, I'm willing to take 75 in a year or 2 years for Coca-Cola, and would do these leaps and earn some really good premium. So it does in some instances really make sense to do leaps, and I've done leaps on puts too, and you can really make some good premium. But you have to be careful because then your money's tied up, especially if it's a put. It and if you can't do another covered call if you do a leap covered call. I do it with Coca-Cola because I inherited a lot of Coca-Cola, and the cost value is so low that it's almost like capital gains is like 80-90%. Um, so and with having a lot of shares with Coca-Cola, you know I do those quite a bit. And then I'm also going to be careful not to roll to a bigger loss. And that's what happened with ARK and with Microsoft. I kept trying to roll out of it and learn the hard way. I just kind of dug a deeper hole. So I'm going to be real careful to really take the loss early on and take a smaller loss than trying to continually roll out of something that's going to get me into bigger trouble, and where I'll end up taking a much bigger loss. So, and then another thing that really made a big difference is this planning worksheet. And again, it's available to my patrons on Patreon, and it's real easy. I just track what I'm doing for the next 2 to 3 weeks. Anything that's near expiration has an ex dividend date, and I identify trades that I need to look at and keep an eye on. And it's helped me to avoid early assignment through ex dividend dates. And I haven't had any since early in the year. So that planning worksheet has made a big difference. I've kept track of ex dividend dates again, primarily through this planning spreadsheet that I put out every week, or I set up every week, and I use it to do my trades. Close or roll at least a day before expiration, and that is huge. There's some great videos out there how people have taken a loss and they thought they were outside the money, and it expired and they got burned because the stock after hours took a huge dive, and then they took a loss on both sides of the trade. So I recommend for anyone and everyone, don't wait to that expiration. You can let things expire, but be sure you're willing to own them and be sure they're way out of the money. Closing any positions that have a 90% probability. That's something I added probably back in October, and it's made a big difference. I've probably closed 25 or 30 contracts. So pretty much if I sell something and I make $100 and it's worth $10, then I'll close it at that point. And it's been able to allow me to make more premium down the road because I can, a lot of times if the market goes against you, you may end up having to roll. And if I find I typically don't need to roll as much, and that's part of what the graph up, or not the graph, the table up above it was showing. Um, and partially why I'm not rolling as much because I'm ending up closing a lot of these and not needing to roll them. And it's been able to increase the profitability. So, and I may actually lower that. I may look at 80% because I find I have a lot of things at 80%, and it may make more sense to do that. If you add a comment below, if you think that's something I should look at, if it's something you're doing. So, and then last but not least, less trades, more contracts for premium. So, like I said, I started out doing one contract pretty much with all my trades. Now I'm doing two. I may look at three, especially if it's quality investments that I want to own. Um, and I can earn a good premium. There's no reason not to do three contracts. The goal being to do fewer trades, make this even more passive, and try to become even more successful with it. So in short, that's my year in review. I've been able to live off these two accounts, and I've been able to still get a pretty good return with it. And I've increased the cash. That's been huge. So going into 2022, I've got a lot more cash. So I hope you enjoyed this. As always, please subscribe, hit that like button, and if you want to, I'll have details below if you want to look at becoming a patron. Um, I find it really worthwhile. I'm really enjoying these weekly meetings that I'm having, and we've really been sharing a lot of ideas. It's actually helping me as a trader. So I hope you enjoyed this, and I hope you have a wonderful day. Thanks for joining me.